Alright, this video is going to be more of a long-term video on SPY. I want to talk about, I just charted Elliot Wave on SPY because I've been looking at the dollar lately, as I've talked about in other videos, and it keeps on going higher, and it's making me think, like I stated in the last video, that it might just keep on going higher until this move on SPY actually bottoms out, which I projected like around like 320 to 340, maybe in the fall time. And so it was making me think, if we're going down and we're going to bottom up in the dollars and to keep on going higher and not consolidate for a fourth wave yet, then what happens when this actually does consolidate? It might consolidate around the same time that SPY is bottoming out for this move, which you could call a 5-wave move, A wave. And it could bottom out at the very top of this third wave, and then we start a fourth wave down, and that's when we get a B wave, and then the final fifth wave move up would be the C wave down. And so I was looking at the chart, just going through it, because that makes a lot of sense. And this is an obvious first wave, second wave, and then when you think about the Corona crash right here, you would think that that is one of the major waves too. And so if you put the third wave here, does it make sense? Well, I went down to the daily chart and I did chart all the way for a first wave right here, a second wave right here, third wave right here, fourth wave right here, and then this makes perfect sense for a fifth wave for the overall third wave, and then the fourth wave is the Corona crash. And then we got a steep move higher, which is typical with fifth wave for the overall fifth wave. So if this is the case, then that means that we topped out at 480. Does it mean that we're not going to see all-time highs for a long time? Because if you know anything about Elliot Wave, like I've talked about, if you go all the way up here to 480, this whole correction from 94 all the way to earlier this year, we have to see at least 50% drop. So that would be 262, and then a lot of times 0.61 is another good area to look at, but it can technically go all the way back down and just not break the low of the start of wave 1. So this looks very valid. And so if we're doing A wave, like I said, dollar keeps on going higher. B wave, dollar does a fourth wave. I talked about in the last video. This fourth wave on the overall third wave took about a year. That would give us about a year to bounce. And then we would see the move higher for the overall fifth wave. To completely finish it off, we would get the B wave and the C wave down for the overall fifth wave on the dollar. And let's say we went to 330. 338 is what my target is for this A wave. And look at that, the 1.61 fib takes us to 250 on SPY. So it would basically be like wiping out all the gains post Corona crash. Basically wiping out all those, and then it could go farther down. We don't know how far it would go down, but it would at least go to 262 and possibly 210, and it could go all the way down here and fill the gap at 157. So, in my opinion, this seems like the most likely scenario. We finished a overall cycle, basically, that started, well, this chart goes back to 93. It might have even started before then. We finish the cycle, we go down all the way down here, and then we would get hyperinflation once the dollar finished the fifth wave and the dollar starts correcting. Let's say the dollar goes to like 115, the dollar corrects all the way down here to 93. If you're still having supply chain issues and the dollar is dropping as well, then prices shoot up. And that would be the start of the move higher in the overall market. But this could take, let's say A wave take about a year, B wave takes about 6 months to a year, so that would be like March of 2023, maybe into the summer, we get a B wave, and then we get the final flush, which it could take like a year or two. We're talking like 2025, maybe, when this is finished. And then we would get the hyperinflation, and how long would it take to get back to new to all-time highs? Who knows? One of the guys I follow, he completely screwed up his projection, but his name's David Hunter on Twitter, and he thinks that when the dollar does fall, it's going to be bullish for metals, which it will be, but it's not going to be that bullish for equities. So this might have been the top, and that's kind of just what I wanted to relay in this video, is that you have to be aware of all possibilities. If we get a 5-wave move, then that's definitely not an ABC correction for a second wave here. I would be looking for a 3-wave move bounce and then lower. So really, if we zoom in here, I know this is scrambled up because I'm looking at it on a lower time frame, but really, if we're looking at this and we want this to only be a second wave, let's say this is a first wave and this is a second wave, we would have to call this the bottom. If it goes lower than that, then it's clearly making a 5th wave. And so we would want to have 362 the bottom, and then we would want to start making some headway up here. But I think that's pretty unlikely. I think I'm like 90% sure we're going to go lower than that. And so the ABC correction and the overall cycle being done seems like the most likely scenario, being unbiased, because I think before I did want this to go higher. I wanted to see new all-time highs, but another thing that could happen though is, let's say this is an A wave and we do get a B wave, maybe we'll get an irregular correction, because a 4th wave should give us a lot of momentum. Maybe we'll get, let's say we go down to 338 and we get an irregular correction, and we get SPY going all the way to like 515 and then falling down for the C wave. And irregular corrections are actually the worst C waves though. So if we do get that 515 or so, the C wave would be pretty drastic. It might go past the 1.61, could go down even farther than you think. So that would be good for you if you're bullish, but you'd have to know to get out of the market, or else you could lose, what is that, like, let's say it went to 150. If you didn't get out, you would lose 70% of your portfolio. So just something to think about. I think this is the most likely scenario. It's not time to panic yet. You're still going to get a bounce here in the next like 6 months, hopefully in the next 3 or 4 months higher. And so if you're still in the market, you have time to get out, unless you're just planning on staying in for good, like some people are. But I mean, at some point you got to think too, like, we've been in a bull run for such a long time. People are so fixated on the fact that the market only goes up that eventually that's going to break, and it's going to catch so many people off guard, because they're going to wonder like what happened with the system, and no one's going to trust the system anymore. But really, it's a cycle that's finished, and it's time to correct and then start a new cycle. I just hope that we don't end up like a market like Japan, where they're stuck for decades trying to make new all-time highs. I don't think that will happen, but it's something to think about, everything going on in the world right now. So just wanted to throw that theory out there, but I'm starting to think that's the most likely scenario. Let me know what you think in the comments, and please subscribe so I can keep on making videos like this. Really helps the channel out, and please hit that like button as well. I might do a shorter term SPY video later in the day.